Welcome to the Capital Spreads weekly update. Today is Monday the 18th of February 2013. It's been a relatively flat start to the week, obviously a quiet week because today is President's Day in the US, so not really much trading expected from US markets at all. So, as mentioned, relatively flat for the FTSE. FTSE's trading around 63.25. The Dow futures still just below that 14,000 level at 13,970. Euro dollar at 133.40. Cable at 154.70. Gold, which did suffer from quite a sell-off at the end of last week, it dipped below 1,600. It's just back above there. It's at 1,610. And Brent is around the 117.75 mark. So yes, today is very much a quiet day, really nothing to report. So the rest of the week does kick off really tomorrow, and it does get really quite busy for the rest of the week. So to focus on tomorrow, which is relatively quiet, but we do get German ZEW survey. That, of course, is a business confidence survey, and that is expected to rise. So we should really there see economic expectations and current conditions just improve, and that's encouraging because, of course, the latest GDP data from all the countries, all the major countries in the Eurozone, were very disappointing last week. So the general consensus is that even though they were worse than expected, those growth numbers, they're probably likely to be a bottom, and we could see things improve from here. So it's quite an important number, that, tomorrow, and that's the one to focus on for Tuesday. Then into Wednesday, we get inflation data from both Germany and France. We also get, will be one of the highlights, UK labour market data. Now, of course, the labour market in the UK has really surprised to the upside over the last year or so. Even though the economy is being very sluggish indeed, employment continues to rise. So there are still jobs being created, but those jobs don't seem to be being turned into particularly sort of productive jobs at the moment. So close eyes on the claimant counts number. That's expected to dip once again, so we should see, at least the expectation is to see a decent set of employment numbers for Wednesday. But of course we'll also be watching those weekly raises to, well, the percentage raise to average earnings, and just how that is keeping up with inflation, because at the same time we get the Bank of England minutes as well. Now, of course, the recent inflation report was saying that the Bank of England expects inflation very much to remain quite high and above target for a little bit longer than it had previously thought. So the employment data and the Bank of England minutes will be interesting together because, of course, weekly earnings will want to keep up with that inflation. We also get from the US some PPI and housing start data. From the Eurozone, we get consumer confidence, and then we end off Wednesday with the FOMC minutes. And then we go into Thursday. So Thursday, we get some PMI surveys. Those are from Germany, primarily will be the one to watch. And in their case, it'll be the manufacturing number that will be quite interesting because, of course, last time that dipped below the 50 level. Of course, below 50 means contraction, above 50 means expansion. And the expectation is that that manufacturing number should creep back above 50. So again, another sign perhaps that the recent negative GDP numbers for certainly Germany may be temporary. We then get US CPI, and also from the US we get Philly Fed and existing home sales. And then into Friday, and Friday relatively quiet, but we finish off with the German GDP number. Of course, their second reading is, their readings are quite close together, so we get that, and also the IFO survey as well. So from Germany, a big focus really on their confidence surveys this week to see whether these will indicate the bounce back in growth, of course, that we saw And that's very much a theme for this week. Also, I think that will probably become more of a focus towards the end of the week is the approaching sequester. So we're getting nearer the end of February, which means on the 1st of March the US has to deal with its government spending cuts that are due to come in then. There's a lot of wrangling going on, political positioning. The Republicans are very, very reluctant to raise taxes any further, and of course the Democrats want to raise taxes and reduce the amount of government spending cuts. So that will possibly come, it will probably be a focus towards the end of this week, and certainly as we go into next week, I should imagine the sequester will probably be the main topic of conversation. That's it for this week. As ever, do give us feedback, media@capitalspreads.com.